Hey, good morning. Welcome to the morning brief. Today is Wednesday, September 18th. But before we get going here, I just want to let you guys know this is the last morning brief for approximately 2.5 weeks. I'm going to be stepping away for about 2.5 weeks for some mental relaxation and a break from the markets. So I haven't done this in over 3 years. I haven't really missed a day in almost 3 years. So I'm going to be stepping away for approximately 2.5 weeks. We'll see you back here October 7th. Monday, October 7th, we'll be back here doing the morning brief. So there you have it. So today, what's going on today? So we had 8:30 numbers. We had building permits and housing starts. Both building permits and housing starts were better than expected. And of course, why not? If the Fed's going to lower rates, we might as well build, because that means that the price that we can actually start a house, um, get it started, permit it, and it will be um, cost less in the future with the Fed potentially lowering interest rates. So there you have it there. That doesn't surprise me at all. That's anticipation of lower rates. 10:30 we have crude oil inventories, which affects crude oil markets. And of course, the big daddy of it all is federal funds rate, federal FOMC economic projections, and the FOMC statement and press conference, 2 o'clock and 2:30 there. So this is where Federal Chair Powell will speak and will let us know what he's going to do with the economy, with interest rates at least, at 2 o'clock, and then the press conference at 2:30. So big red market will have a large impact from this news statement, and whether or not they're going to lower interest rates and how much they're going to lower interest rates. So there you have that. Looking at charts, we're still in this potential M pattern. Yesterday was barely positive, but it was positive. Ugly bar. See that rejection, that price rejection. Would not surprise me to see the market sell off substantially after the Fed lowers interest rates. Simply, it's a buy the rumor, sell the news type of scenario. So it would not surprise me to see a sell off happen when the news comes out that they have lowered interest rates, regardless whether it's a quarter or a half point. It's a sell the news scenario, at least in my opinion. Volume has been blah. The chart pattern's kind of blah too. We'll see what happens if we can break out of this consolidation band. Wait and see if that actually happens. You can see here we were barely positive on the day. However, inventory was negative, and it was negative a lot prior to that last 60-minute bar. So a lot of people hedging their bets, going ahead and selling in advance of the FOMC meeting. That's the way I read that. What do we got? Overnight action. Wow, this is crazy. Only 13 points, way below average. Nobody wants to do anything until the Fed does its thing. So, very narrow overnight range. Where do we have support? 56.80. It's obvious. Nice confluence there. 56.50. 56.30's got some other. Of course, 5600 on the top side. We're kind of 5700s in the middle here, so we're not too worried about that number. But 5750, 5770, and 5800 is going to be on the radar, folks. 5800 potential. Stock Traders Almanac for today is 47.6, 47.6, so a negative bias from the Stock Traders Almanac. That's all I've got for you. Again, this is the last morning brief until October 7th. So hope you guys enjoy the time without me. I'm not even taking a computer. I'm going to be off grid for about 2.5 weeks here. So hopefully mentally that will be a great place to reset. Remember, we all need to take a break from the market now and then. It is what it is. See you October 7th. Have a good one. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.